up, This is Due Diligence here, and as of right now, it's it's June 19th, 2021, and it's in the night on California. For some of you, you're probably already asleep when you're on the East Coast. And I mean, I did something really dumb. I recorded a 20-minute video on Torch, and I forgot to really turn on my mic, so then now I have to re-record it. But anyways, this video is more about the price action prediction or price action movement or price action probability for Torch on Monday rather than an in-depth DD video. DD means due diligence, and one of the subscribers on the channel are asking for in-depth DD, so in-depth due diligence. So I spent around 8 hours today on reading a lot of articles on Torch and the Torch metamaterial merger, and I went into the SEC filing and look up all of the documents, including their financial statement, looking at their merger agreement. Essentially, what you really need to know in a very short period of time, or a very interesting thing, is basically Torch and metamaterials is merging together. And why? Metamaterial wants investors' attention in the NASDAQ, and it just happens that Torch can offer that, and basically it operates like a shell, right? And metamaterials are traded in the OTC, and I also look at their financial statement on the OTC. Sorry, I'm gonna sneeze. Very, very interesting. And for those of you who are looking to really hold either metamaterials or Torch, on the next video about the in-depth DD is going to help you really a lot. I'm going to go in depth about price prediction, price movement, all their asset management, and what is metamaterials is really into, the rumors about Elon working with metamaterials, and whether Torch is really a good long-term investment or not. Because eventually, when it merges, it becomes metamaterials, and basically, how much whatever your shares of the final metamaterial shares that you will get from this merger will be 25% of like the combined share of those two companies, the merged one. And that will be a very interesting mathematical thing to really look at. And I will go very in depth in that in the next video. So right now we're just gonna, because it seems like a lot of you just want to see the price action, right? Like as a day trader or as a trader, you just want to see, whether this thing is going to be red or green, it's going to go up or go down. And a lot of you are very interested in the right and wrong side of this thing. My price prediction as far as right now goes is super, super accurate. And I am not, I am not a stock wizard, or, I'm not someone who's going to be 100% all the time. But I can say that in this video, I'm going to make some probability predictions. It means like, what percent it will happen like this, what percent it will happen like that, based on the material and based on the information we have as of right now, right? So as you can see, well, Torch used to be a penny stock, okay? Penny stock. And everybody on this channel, or every dude who's working on this channel, making thumbnails, my business partner, whatever, knows that I never touch any stocks lower than $3. Lower than $3, no, I'll never touch it. Because essentially the ball game of the penny stock is, let's just say I don't really like the scene. Okay, I love, as much as I love Wolf of Wall Street, I am not a fan of trading penny stocks, and I prefer liquidity trading. Blah blah blah. You guys don't really want to know right now. If you're interested, leave a comment below. I can explain to you what liquidity trading is, why liquidity is so important, why cash is king. But for right now, we go back. We take a time shadow and go back to February. February was the earliest price action we see that spiked a lot. So what happens is particularly on this day, which is February 10th, we see a huge volume influx. Right? This is around $250 million. Or not $1 million, 250 million volume. So when you have 250 million volume, of course it's going to go up, right? And also it's a very steady volume. It builds up over time, blah, blah, blah. Great. This is day trader's dream right here. Okay, this is great day trader's dream right here. And on the second day, you see people, dumping it, aborting ship. That's normal. Because when you see I think this is a $1.2, over $1.2 price increase on a bloody penny stock, bro, I would as a swing trader, I will definitely dump this, okay? And I probably will buy it at the dip on the third day or something. And on the third day, you see a 1/3 of the volume than before, maybe 1/4. Not really sure because I'm eyeballing it. And it's normally we'll see an increase in price action, but when you look at the candle chart, it didn't really fill the entire line up here. Okay, if you see half of volume here, it probably will fill up all the way until here. Well, let me put it over here. It will fill up to here. Okay, but it didn't happen. Normal, right? Just happened that day is a Friday. And what you need to know about Fridays is where or when options expire, and when options expire, you will either have a gamma squeeze on the other side, which means it will drop significantly, or you will have a lot of people angry about not exercising their options. Or you will have a lot of people gambling, basically putting their shares into a stock and looking for or hoping for a huge volume spike over the weekend, and eventually it's going to have a gap up. And in here, those gamblers wins. It's a very educational strategic move here. And on Monday, you have a lot of volume, almost 230 million. So when you have that's not much volume, always gaps up. It gaps up, and you have all-time high right here, right? It reaches $4.24. Huge. And as you can see, it refuses to go up to 5. Okay. 483, in my other video, I talked about this. One of the support lines, when it go over 483, most likely it's going to go to 5, which actually come true on this day. But anyways, let's keep going, right? So right now, let's zoom back to where we actually care about price prediction, which is for next Monday, right? So next Monday, there are 3 different scenarios, okay? The first scenario, let's just talk about my favorite scenario, my hopeful scenario, which probably won't really happen. And the second scenario will actually pay out. So my scenario will be a day trader's wet dream scenario, where you start off with pretty much the same volume as on Friday, which means probably will open at $6, right? We don't see a gap up, because when you have a gap up as a day trader, I have to think about whether it's really worth it to chase the height or not, especially in this stock. It's sort of risky because it's only $6 per share. And 1,000 shares is only 6K. That's not really a lot of money, in terms of the big institutions and everything, right? So then, what I want to see is I want to see the volume incrementally increase. Okay, it starts in here, sort of like stacked up from the pre-market, and then when market open, bang, it shoots up. And at about the starting price, I probably buy like a couple of hundred shares, and it shoots up. And it just shoots up. The entire day will just like up action. You meet another resistance. It goes down to another price, and then it shoots up again, and it reaches all-time high. Probably somewhere around $7 or $7.20, right? I mean, the worth is 6.8, but you make 80 cents, right? 80 cents. You make 80 cents per share. You buy 1,000 shares. Do the math, right? Pretty good profit. But that's not really likely, because as far as right now goes, okay, next video I'm going to Thinkorswim, which will have the in detailed aftermarket trading volume and aftermarket pricing and everything. You actually see a lot of action right now, and right now the aftermarket this stock for Torch aftermarket is traded at 669. Great number, boys. Great number, boys and girls. Great number. That means we already have a lot of people betting it. It's going to have a gap up day. And most likely, it's going to have a gap up day on Monday, which for me, it's okay. I'm not greedy, because if I would be a little bit greedy, what I would do is by the end of market close on Friday, I'll probably buy some over here. I have the liquidity to do it, but because my previous experience with those risky plays as a swing trader, especially with the oil sudden dip, on Wednesday, I kind of having an issue. I have a trust issue with the retail group. Okay, I have some trust issue. But for those of you who are holding it, at the price range from $0.5, which is like all the way over before anything happened, any huge, price action happen, like, way before the torch scan, right? Or around $1.6, or even when you buy it in here, which is only $3. For those of you, a gap up is great, boys. A gap up is great. So when you have a gap up, you can actually reduce your position a little bit, and you see a huge volume increase. You sort of like increase your position a little bit, and then you go up, and then you sell it on top, right? Or for those of you who are longing this for a longer period of time, guys, be cautious, okay? I think a reverse split is coming, and they might issue more shares. That means more dilution. And for those of you who watch other YouTubers talk about Torch, some of them are wrong. Okay, they're saying so. Some of them are saying that on the board meeting on the 11th, there are 5 items got passed, right? And I'm gonna go super in depth in this in the next video. Hopefully, you guys can actually watch the next video, because it feels like you guys just want to hear the price action in my prediction. But anyways, so next video I'm gonna go very deep into this. The reverse split clause, and then the issuance stock, the issuance of stock clause on that board meeting actually will eventually fuck us over as shareholders. And you are looking at a top of 95% dilution on your current shareholdings, on your share holdings, which means your 100 share will become 5 share. That's a huge difference, isn't it? Especially when you're looking for the special dividend deal. And thank you so much for our subscriber Tiffany to bring up the dividend issue here 2 days ago or a day ago when we pushed the video out about this day, why it drops this day because of dividend capture or dividend price capture. If you are into finance, and I probably will, explain it a little bit in the next video, the in-depth DD. And you guys can expect a lot of information in the in-depth DD video. And this is going to be our first in-depth DD video, due diligence video. So then, we're gonna look at the views. If you guys are not really into it, we're gonna probably deviate that for a little bit. But with a lot of information we put out there, you can actually know what to do. Well, quote unquote, know what to do. But you still invest at your own risk, right? You should only invest the money that you're willing to lose in the market. I mean, again, we're not financial advisors. We do not give financial advice. So after the second thing is the second scenario, the recap, right? First scenario is the me scenario where, okay, the me scenario is we have a, small volume to start with, go up to 7.2, happy, lunch money for the entire week, right? Great. So first is me, but this is around 40%, okay? Not really that much of a percentage of this is what happening. And the second was, is you guys, is the holder's paradise, right? You have a gap up over here, which is great. It was a gap up like start with 6.7, it gaps up, and it goes up to 7.5, quick profit right there, right? For all those holders out there. And for me, I have to evaluate whether the risk is worth taking, because when it gaps up like that, a lot of people will sell, right? Because I think the average chip price, the average holding price is right here right now. So this was probably 50% of the chance, because right now the aftermarket, the stock is traded at 6.69, right? A lot of foreign players are really betting hard on this price movement. And the third one probably this is the less likely to happen. Okay, the first one is me, the second one is the holders, and the third one will be the fluctuation play. So if you're Citadel, right? If you're Citadel or the short people or the institutions who just want to fuck us or mess around with us a little bit, what you do is on the Lord's Day, which is Sunday, you go into your office at midnight, which for those of you who monitor Citadel's work habits, you will know on about Sunday midnight, they go in and make some evil plan to squash us, right? So what they do is you will probably start it with a lower volume, because what they did is they beat up the aftermarket trading on the Sunday, midnight, to basically drive down the price action, right? So this will actually be somewhat good. The opening price was somewhere still gonna be like $6 ish, like 5.8. And what we know about retail investors is A, we're resilient, B, we're smart, and C, we don't give up. Okay. I mean, those institutional investors, they have the money, right? All of the retail combined, we probably only have we own like 20% of their total asset. But still, the reason why we're seeing us winning AMC, well, that's another story for another day, because I believe that we're actually no longer winning AMC anymore. That's why I'm trying to deviate from meme stocks right now. But that will be for another video probably gonna push out on Sunday. Sorry, I'm rambling a little bit. But for this scenario, what happens is let's say it opens at 5.8, right? People panic selling, and then it drops a little bit, maybe even to the 5 support line. If it actually goes under 5 support line, it's essentially we're effed. Okay, we're effed on this. But this is the least likely what happen, right? What will happen is it opens at 5.8 and it will actually shoot up incrementally. But the price action when you start at 5.8 is actually going to be less volatile, or it will grant you a less upside than the first and the second scenario. So we probably will see it hit $7, and that probably will be end of it until there's going to be even more people coming in and buy it. But again, guys, this is the least likely. So I'll probably give it a 10% chance, and then the holders wet dream will be 50% chance. The day trader / my wet dream will be 40%. Okay. But this stock have huge upsides before the reverse split. And when the reverse split comes, all of you who are hoping that you'll have a huge payoff on the stock dividend, special dividend, it's just not going to happen. Because as far as company operates, they literally leech off of shareholders. And because they're literally a oil and gas company, they are not really producing, they just hold assets. What they're really betting on is oil price to keep increasing. And when oil price keep increasing, that means the production, the asset related to oil will keep increasing, and they'll have a better deal by the end of this year, which is the marked sale of all their assets, right? But when you have too many shares, that means they have to issue too many dividends. That's why reverse split is inevitable, guys. Your 100 shares is not going to be 100 shares by the end of this year or by the end of the merger. I don't know the timeline of the merger really yet, but right now it's approved, right? So, and another thing you have to really, if you just want to watch this video, right, I'm going to pack as much information as possible right now in here. For those of you who are not willing to spend maybe 20 or 30 minutes listening to me ramble and go really in depth about the technical analysis, the DD, the financial sheets, the SEC filings on the Torchlight and on Meta materials. But right now in here, what you have to know is if you want a special dividend offer, you have to get in. You have to hold the stock from the 22nd to the 24th because the T+2 rule. Okay? For those of you who are saying, no, I just need to buy it on 24th. No, that's not right. If you look at the tweets and look at the financial institution or the financial rules for this, you have to hold it from the 22nd to the 24th. And as far as I'm going to make a prediction on Monday night as far as whether on the 22nd it's going to be a significant shoot up or not, because Monday is the 21st. It's a Monday, option day, influx of options, call options come in or whatever. And by the way, you guys can trade options now, right? You can trade call or put options on this stock as of last weekend. Apparently, you cannot really trade options on this stock beforehand because it's a penny stock. Huge risk of the market makers, no? And then right now you can trade options. Be very careful with the options here, okay? Be very careful with the options here. And I don't just make sure, because options have exponential leverage essentially. Call options have exponential upside, but you have like a defined downside. But guys, play with it at your own caution, okay? And we're gonna push out a option sort of introductory video out probably later this week. Later next week. So Sunday is the start of a new week. And guys, keep in mind that please feel free to comment. Like if you just hate us, tell us like in the comments, right? If you love our content, tell us you support us, right? And then please smash that like button and subscribe, okay? But enough for this. So we'll going back to this topic on the 22nd. So on the 22nd, we will see the last group of people who are trying to get the FOMO people, right? The FOMO one trying to get on the special dividend offer. And a lot of people are saying it's going to be $1 per share, or $2 per share. Some are saying $3 per share in February. $3 per share is literally impossible in February, okay? Right now, it's possible, but unlikely. Most people's predictions like around 1.5 to 1.3. I'm a little bit pessimistic. I align with some of the people on Seeking Alpha. I think it's going to be less than $1 because of the... you know what? Don't quote me on that yet because I have to still think about it, and I'm going to talk in depth about it in my next video, the in-depth DD video. I think this is probably enough for now, because for those of you who are just interested in price action, or just want to hear me say that it has a huge potential, especially a huge potential for a gap up, I think this is the video for you. And guys, you're gonna get lucky in your next stock pick if you smash the like button and subscribe to that channel, right? I know you guys know it. All right, I think this is it for now. I think I missed some of the points I intend to talk about, but as you know, I was too dumb to not open my recording, the mic recording, so you guys lost a more quality video that I recorded about 20 minutes ago. But right now, I think this video will do, and we're either going to push this video out on Monday morning, or maybe Sunday night, or Sunday morning. It seems like a lot of you early riders would love to watch our video in the morning. But anyways, guys, see you on the upside.
What's up, dude and dudettes? It's Dude here with Due Diligence. I want to let you guys know that we are not financial advisors, therefore we do not give financial advice. We are entertainers though, so therefore this video is for entertainment purpose only. Remember to like and subscribe.